Good evening. Please come to AS2 first. AS2, our topic is valuation of joint product and byproducts. So, joint products means two or more products that will emerge out of a common process. Sometimes the byproduct or scrap can also be generated. Byproduct and scrap will be valued at NRV. The value of byproduct and NRV will be deducted from total cost so that you will arrive at the cost attributable to joint product. And then the joint cost will be allocated on the basis of the relative sales value. Underline, joint cost means common cost will be allocated on the basis of relative sales value. The relative sales value can be based on sales value at split off point, or it can be sales value after further processing, or it can be sales value after further processing. Sales value at split off point means where they separate, where the joint products separate. Sometimes there will be further processing of joint product. So sales value can be also taken after further processing cost. This you will study in one chapter called uh, joint product and byproduct in cost accounting. More details will be done, more detailing will be done in cost accounting subject. But today we'll take one or two basic questions for understanding how the joint cost is split. Is it right? Are you ready for solving one question? They are measured at NRV. At the top there is a heading byproduct scrap waste material. Byproduct waste and scrap material are not intentionally produced. Plus their values are also very uh, small, not very significant. So the standard says do not apply much of your intelligence, just measure them at NRV because their economic value will be very low. Find out how much amount you will realize when you will dispose them. So that is called NRV, and this value is deducted from the cost of the main product. We'll see the application of this in one example coming soon. My dear students, first we'll come to question number 9. Check in your notes question number 9 printed below. 5000 units of X and 2500 units of Y arise jointly from a production process which cost 2,60,000. So what is the joint cost? 2,60,000. And what you get out of it? You get two outputs. You get two types of output. You get X, EXE, 2500 units, and you get Y. How many units of Y? 2500. X is 5000. Sorry. These are the units. From one common process, you got two outputs, X and Y. X 5000 units, Y 2500 units. And the sale value at split off point is 100 rupees. So selling price per unit is 100 rupees for X and 60 rupees for Y. There is no other information given. Explain how the total cost will be allocated to the product. How the total cost will be allocated to the two products. So my question to this batch of very talented student is, two things you have to answer me. Out of this 2,60,000, how much will you allocate to Y and how much you will allocate to X and Y, and what will be per unit cost of X and Y. What will be per unit cost of X and Y? Kindly reply. First you tell me allocation of total cost between the two products, and then you tell me what will be cost per unit of X and Y. Any response? Come on. Any response? All of you should participate. So let me solve it together. Let us solve together. Solve it together. First you make a table. If the answer is printed in your book, just check it. If it is printed, it is same answer. Please check. Quantity produced 5,000, 2,500, 7,500. Selling price per unit is given. Selling price per unit is 100 rupees, 60 rupees. Don't add selling price in total column. That is of no use. Therefore, total sale value multiply. Total sale value will be 5 lakh and 1,50,000. This is the ratio. This is called sale value at split off point. It will take care of both quantity also and rate also. It will take care of quantity also and rate also. So therefore, we will call it sales value at split off point. Now my total joint cost in this question is, two lakh 60,000. Can you please apportion 2,60,000 in this ratio of 500 is to 150? Come on, I have started getting the answer. Some student have said X 20K. 20K, what is 20K? It is 200K. Miss Tanya, it is 200K, not 20K. And 60K, 60,000. Saurabh Chauhan, 2 lakh and 60,000. Sanket Jain, 2 lakh and 60,000. You are right. Now my question is, what will be the cost per unit? Cost per unit. So you have total cost 2 lakh rupees. You have total cost 2 lakh rupees. Divide by quantity. 2 lakh divide by 5,000. How much? 2 lakh 5,000. 2 lakh divided by 5,000 is how much? 40 rupees per unit. 60,000 divided by 2,500. Divided by 2,500. How much is that? 24. Don't take the total. So this gives me cost per unit. In this question, closing stock is not given. Check whether closing stock is given. Production is given, closing stock is not given. If closing stock was given, you will multiply by 40 and 24. If closing stock was also given, you will multiply by 40 and 24. So this answer is for basic understanding. Now we'll go to one exam type question. You will find this question number 44 or near to that in your notes. Very, very important question. This question will be asked for 8 marks if they ask you. This will test your basic knowledge of this chapter. Okay, Pawar is right. Pawar is always right. Then question number 44, or this question find out in your notes wherever it is near 44. in a manufacturing process of Vijay Limited, one byproduct BP, BP means byproduct, emerges where there are besides two main product MP1 and MP2 apart from the scrap. So you have four items emerging from one process, main product 1 and 2, there is a byproduct and there is scrap also. So byproduct and scrap will be valued at NRV. Details of the cost of the production process is here under. Details of cost of production process is here under. Very important question we are solving. Do not lose concentration. Raw material 15,000 units were introduced at the beginning. Cost of raw material is 1,60,000. Wages 82,000. Fixed overhead 58,000. Variable overhead 40,000. So my dear student, this is your total cost. Please add and tell me. Please add and tell me. Kindly add and tell me question number 40, 44, something like this. You can do yourself. This is an important question. I was waiting to take this question for you. So you are saying the total cost of these four items according to the student is how much? 160 plus 82 plus 58 and plus 40. What is the total cost? Come on, if you don't answer, how will I teach? If you don't reply, how will I teach? Total cost of raw material, wages, fixed and variable overhead. So now finally you replied 3,40,000. 3,40,000. Now what are the outputs they have produced? MP1 they have produced 6250. MP2 they have produced 5,000 and byproduct 1,600. This time they have given you the closing stock also of main product 800 units and main product 2 is 200 units. These are the, you have to do the value of this closing stock. Now they are saying the average market price MP1 and MP2 is rupees 80 per unit and 50 per unit. MP1 selling price is 80, MP2 50. So this will help you to calculate their relative sales value. Byproduct is sold at rupees 25 per unit. Byproduct 1,600 quantity, selling price is 25. There is a profit of 5,000 rupees on byproduct. Profit is not considered. Profit on sale of byproduct is not considered. Profit on sale of byproduct will not be considered. That is given to confuse you. After incurring separate processing charge of 4,000. So this 4,000 I will reduce from the sale value of byproduct. 4,000 rupees will be reduced from sale value of the byproduct so that you will be able to calculate the NRV and a packing charge of 6,000. This also I will reduce. So NRV of byproduct will be 1,600 quantity into 25 rupees minus 4,000 on processing and minus 6,000 on special packaging. That will give me NRV of byproduct. Rupees 6,000 was realized from the sale of scrap. NRV of scrap is 6,000 rupees. My total cost is 3,40,000. I will deduct the scrap value and NRV of byproduct from the total cost, and that is 30,000 I will deduct. 6,000 I will deduct. So this will give me 3,04,000 as joint cost. This joint cost I will apportion in the relative sale value, and I will be able to calculate the cost per unit. Once I get the cost per unit, I'll multiply by number of units in closing stock, and that will give me value of closing stock of finished goods. That will give me closing stock of finished goods. This question has a small problem. NRV of MP1 and MP2 not given. If NRV is not given, then I will value inventory at cost only. If NRV was also given, then I will apply the formula cost or NRV, whichever is lower. But because NRV is not given, we will value at cost only. Is it right? If NRV is not given, we will value at cost only. So this is this question. This question you will write in notebook. Open your notebook. Kindly open your notebook and write in the notebook. I am going to present in a different format, easy format for you to understand. This question is highly likely in the exam. So write down please. Calculation of value of closing stock. Calculation of value of closing stock. I am dictating the answer, you will write in the notebook. Right hand side two columns. Right hand side two columns. In a different format, I am giving you the answer. You can follow institute format also, no harm. First point A, write material. Material cost. Material cost, that is raw material. Material cost, that is raw material, is 1,50,000. Raw material cost is 1,50,000. Conversion cost, under conversion cost we have three items: direct labor, direct labor, make a correction in your notes, question book. If it is written material cost 160, please make it 150. There is some typing error. Direct labor cost write down there 90,000. In your notes also direct labor cost write 90,000. I will give you an answer according to some different numbers. Then write down fixed overhead. Fixed overhead write down 65,000. Change the question slightly. Fixed overhead 65,000 and variable overhead write down 50,000. So please change these numbers. Change these four numbers. Some typing error probably in the notes. Follow my instruction. Have you done this much? I repeat, please rectify the figures in your notes. Raw material 1,50,000, labor 90,000, fixed overhead 65,000 and variable overhead 50,000. So you will continue. It's a long table. I will change the slide. You will go one below the other. Total combined cost write down. Total combined cost 3,55,000. 3,55,000. Based on our revised data, it is 3,55,000. Less sale of scrap. Sale of scrap, make it 5,000 rupees. I am changing the question slightly. Take a pencil and change the question. An NRV of the byproduct less NRV of the byproduct. Change the quantity of byproduct make it 2000 into 20, change the selling price of byproduct, make it 20, minus processing charges 8000, change the question slightly, and minus 6000. um, packaging charges in your note is 6000, so I'll just make it 2000 here. I'm changing the question. Sale of scrap, write down 5000, quantity of byproduct 2000, selling price of byproduct 20 rupees, processing charges of byproduct 8000, and packaging charges is 2000, and packaging charges 2000. Please change these figures in your question. Done? So NRV of the byproduct will be 2000 into 20, and that is, you will realize, minus cost incurred 8000 and 2000. So that will give you 30,000. That will give you 30,000. So total NRV of scrap and byproduct is 35,000. Total NRV of scrap and byproduct is 35,000. After that you write down, therefore net joint cost, of MP1 and MP2, net joint cost of MP1 and MP2, 3,20,000, 3,20,000. Net joint cost of MP1 and MP2, 3,20,000. What is the ratio of sale? What is the ratio of sale? You have to make some correction again, please. MP1 quantity, is 5,000, and MP1 selling price is 60. MP1 quantity you make it 5,000, and MP1 selling price you make it 60 below, 3 lakh rupees. 3 lakh rupees. Maybe I have solved a different question which looked like your question. This has been asked in the exam twice. So I have taken the different one. And MP2 quantity is 4,000. Change the quantity of MP2 4,000 and change the selling price of MP2 50. I think that is 50 already. That is 50 already. So that comes to 2 lakh. My joint cost is 3,20,000. I will apportion in the ratio of relative sale value. I will apportion in the ratio of relative sale value, which is 3:2. Which is 3:2. So write down, allocated to MP1 below. Allocated to MP1, 3 by 5 of 3,20,000. 3 by 5 of 3,20,000. 1,92,000. 1,92,000. 1,92,000. Then write down allocated to MP2. Allocated to MP2, 2 by 5 into 3,20,000. 2 by 5 into 3,20,000. How much? Come on. 2 by 5 into 3,20,000. How much? That comes to 1,28,000. So this is the total cost allocated to MP1 and MP2. This is the total cost allocated to MP1 and MP2. Rajendra Pawar, Jatin, you are right. Continue. Cost per unit. Cost per unit. Cost per unit. MP1. Total cost allocated is 1,92,000. Please change your question and make it 5,000 unit in the question. It is printed 6250. I sincerely request you to make it 5,000. So what is the cost per unit? Yes, Surya, you are right. Cost per unit of MP1. Please reply. Cost per unit of MP1. 1,92,000 divided by 5,000. 38.40. Cost per unit of MP2. 1,20,000. Rohit Kumar is right. Very good. Divide by 4,000. Divide by 4,000. MP2. Please reply. MP2. Rajendra is right. So that is 32 rupees. Sakshi is right. Rohit is right. 32 rupees. Now, this is cost per unit we have got. Now, in your closing stock, you have some quantity. Closing stock of raw material is not there, but closing stock of finished goods is there. Aditya is right. Chaurasia right. So, write down below value of closing inventory finished good. Value of closing inventory finished goods. Jay Shri is right. Thakur is right. Finished goods inventory, MP1 closing stock. Please make a small correction in your question. Make it 250. It may be written 800. I request you to make it 250 in the last column. 250 into 38.40. 250 into 38.40 is 9,600. And MP2, please make it 100 unit. In your book 200 may be written, or if you want to write the same quantity you can write, but then your answer will change. 3,200. So the total value of your closing stock of finished goods, total value of the closing stock of finished goods is 9600 plus 3200. Total stock, Jay Shri, Chaurasia, Jatin Gupta, you are right. Total is 12,800. Then write down value of closing inventory of raw material. Value of closing inventory of raw material. Tanya is right. Pawar is right. Pawar is always right. How can Pawar be wrong? Pawar is kingmaker. Value of closing inventory of raw material. Come on. There is no closing inventory of raw material. All raw material have been processed. Question has not given you closing stock of raw material. Therefore, total inventory value, value of finished goods plus value of raw material, J plus K is 12,800. Be present every day, every minute. You will understand what is going on. Okay. 12,800. This question has a small area of doubt. NRV is not given. So we'll write a note for that purpose. It is assumed that NRV is more than cost. It is assumed that NRV is more than cost. So if NRV is more than cost, inventory will be valued at cost only. Second note, write down the profit on byproduct is irrelevant. The profit on byproduct is irrelevant, since only NRV has to be considered. since only NRV has to be considered, since only NRV has to be considered, since only NRV has to be considered. This is the answer of this question. I had to make some changes in the question, maybe because I have taken some other problem and solved. So this question was asked in RTP November 15. Exam question is November 12, and I have seen this again and again in different exams also. So I am not repeating. Okay. I have seen in other exams also where this question or similar questions were asked. So students are requested to practice more and more questions now, because more or less every question you will be able to solve. Solution is also provided to you. So please try. There is one theory question printed below. Can you come to your next question? Please come to question number next. Question number next. Company purchases chemicals in drums. So this is drum, okay. This is drum. Company purchases chemical in drums. This drum is not returnable. Non-returnable drum. Their cost cannot be ascertained since the cost of chemical include the cost of this drum. What is important is chemical. But when you buy chemical, you get the drum. Okay, you get the drum free. You will sell the chemical. But after you sell the chemical, this drum will remain with you. The question is, are these inventories within the meaning of AS2? So whether this empty drum which remains after the chemical is sold, will you call it as inventory? Will you call it as inventory? Option A, yes, within the meaning of AS2, and option B, no. So let us see how many of you get it right. Whether these empty drums on which you had bought, in which you had bought chemical, but once the chemicals are sold, you have lot of empty drums in your stock. Whether this will be called inventory as per Ind AS 2. So the answer most of you are giving is no. But why? Pawar is saying no. Jayashri is saying no. The answer is it does not meet the definition of inventory. What is the definition of inventory? These are neither held for sale in the ordinary course of business. Our business is not to sell empty drums, nor in the process of production for such sale, and these are not required for process of production also. Then really speaking, they do not meet the definition of inventory as per Ind AS 2, but they have got some value. They have some value. So if they have got some value, they will be valued at NRV on the balance sheet date. Suppose 100 drums remain with us. We have sold the chemical, but 100 drums remain with us, and each drum can be sold for 100 rupees. So for balance sheet purpose, I will value these drums as 10,000 rupees. I'll value these drums at 10,000 rupees. Somewhere I have to put in the balance sheet. So I'll put it in the balance sheet as other current asset, because these are not inventory. So I will put it as other current asset in the balance sheet, and they will be valued at their NRV. So that was a little interesting question. Now we'll come to disclosure requirement. Disclosure requirement means what you have to disclose with respect to inventory. Financial statements should disclose accounting policy adopted in measuring the inventory. So here you have to record the accounting policy, like you will say inventories are valued at cost or NRV, whichever is lower. This is usually the accounting policy. You can also mention that raw material is valued at cost if finished goods are sold at or above cost. This is your another accounting policy. Or you can also mention buy product and scrap are valued at NRV. This is called accounting policy. Okay. Then you have to disclose cost formula used. You have to disclose whether you are following FIFO weighted average or specific identification method, SIM. You have to disclose total carrying amount of inventory. What is the total value of your inventory, and classification of inventory appropriate to the enterprise. So inventory will be classified into finished goods, raw material or WIP. Is it right? So now we'll solve few more questions and then this chapter will be over. So 5 minutes more. Let me see whether you are understanding or not. This is my chance to test you. Question says, M Limited values its finished goods at prime cost, FIFO or NRV, whichever is less. So they are calculating cost by applying prime cost. Cost is prime cost and they are comparing it with NRV and they are saying whichever is lower that I will take. Whether the accounting policy is correct, option A correct, option B this accounting policy is incorrect. See, this is the intermediate student. Help him. Otherwise, he will keep crying. Whether this accounting policy followed by the company is correct or incorrect. Correct or incorrect? Can the company value inventory at prime cost? Can the company value inventory at prime cost? You are not responding. The answer is incorrect. Why it is incorrect? Prime cost is not correct. As per this standard, Tanya is right. As per this standard, cost will include direct material, direct labor, direct expense, and production overheads. And production overhead. Now, if you are valuing cost inventory at prime cost, which means production overhead was not considered. If production overhead is not considered, your cost is wrong. Your cost is not as per AS2 and therefore this is incorrect. So Kirti, Govind, Rajendra, Pawar, Pavan, Kalyan, you are right. Sometimes you people are amazing. Okay, one more chance to you. One more chance to you. Paper Limited values its finished goods at lower of cost or NRV and buy product at NRV. Comment in the light of AS2. Again, I will give you two choices. Quickly reply whether this is correct or incorrect. Correct or incorrect? Can a company value finished goods at cost or NRV, whichever is lower, and buy product at only NRV? Is the accounting treatment right? Is the accounting treatment correct or incorrect? Company's policy is correct or incorrect? So the answer is company's policy is correct. That is what we have learned. Finished goods will be valued at lower of cost or NRV, whereas byproduct will be valued at NRV. Rohit Kumar is right. Okay, so one more chance I will give you. Next question. These questions are printed in your book. This is question number probably 14 in your book. Check how the company can be, how the following can be valued as per AS2 for presentation in the financial statement. Inventory of livestock, agricultural and forest product, mineral oil, financial assets such as shares held as stock in trade. So all of you go to scope paragraph and read the scope paragraph, then give me the answer. How the following item will be valued as per AS2? How the following item will be valued as per AS2? So I will give you open book exam. Read the scope paragraph. Read the scope paragraph which is given in second page of this chapter, applicability of the accounting standard, and then reply. And then reply. So the answer is AS2 is not applicable for such items. These are outside the scope of AS2, subject to in case 1, case 2 and case 3. These are producers inventories. These are producers inventories. So only writing not applicable is not enough. Suppose I buy and sell wheat, I buy and sell apple, AS2 is applicable to me because then I am a trader. Okay, but if I produce apple, if I produce wheat, then AS2 is not applicable to us, right? Next question, one more question I will take, and then students will practice all the remaining question. If you have doubt, you will mail to me at vinod_ca@yahoo.com. Any query. Then you will write question number, page number, AS number, photo of question and answer. And what is your query in detail. Just don't send me picture. I will not understand what is your query. So if you follow this method of asking query, you will get the reply. Okay. Before asking the query, you must have listened to this lecture carefully. Randomly don't ask. So now one exam question for 4 to 5 marks, very important. This kind of questions are asked and then the student make mistake here. Okay, trust me. Then they will blame the institute for not giving full marks. This is the level of your institute. This question shows you the level of professional exam and you should be able to solve it. If I want to complete the syllabus, I can do it in 5 days only. But then you will not understand, you will not get the feel of the exam. So this question number 17 will give you feeling of what kind of exam you are going to appear soon. During a year, Orpet Limited received an order for supply of 10 machine to be produced as per the specification given by ABC. Who is the seller? Orpet. Who is the customer? ABC Limited. 4 machines have already been completed and delivered. So out of 10, 4 have been delivered. If 4 have been delivered means amount is recoverable from the customer now, so it is debtor. For four machines, for four machine, Y limited is your ABC limited is your debtor because that is completed and delivered. Work on the remaining six machine is at different stages. So out of 10 machines, 4 are complete, 4 are delivered, 6 machines are under progress at different stages. Out of this, 4 units are virtually completed. So 4 are in the form of finished goods. 4 units are virtually completed, means they are almost complete. So we'll call it finished goods. But the finishing of which was suspended after receiving a request from ABC Limited regarding withholding the delivery and production of remaining unit. So what this company says, the customer says, please do not deliver, wait, unless I tell you don't deliver. 4 units are in finished goods, which means 2 units are in WIP stage. This is the breakup of 10 unit. 4 unit completed and delivered to the customer. Amount becomes receivable. 4 units are almost complete, so that is finished goods, and 2 units are in work in progress stage. The accounting records show the valuation of inventory and debtors relating to this order as follows. Finished goods. It is written God here, make it goods. Goods and gods are very different. Okay. Goods, make it 4 unit here because question says 4 units are virtually complete. So there is an inconsistency in the question. It should be 4 unit. Completed unit. Cost is 5,75,000. WIP write down 2 units. Cost incurred is 4,18,000 and debtor 4 units are sold, completed and sold 6,50,000. This is cost, and this is probably sale value. Now, at the end of the year, wait a minute, at the end of the year, ABC Limited has already gone into liquidation process. Oh my God. Your customer has gone into liquidation process. So what will Orpet Limited do? Orpet Limited will cry because your customer has gone into liquidation process. So chances of recovering money is very low. How Orpet Limited should show this item in the financial statement? Given that there is no market for this type of machine. Oh my God, there is no market for this type of machine. Means whatever machine you have manufactured here, there is no market. If there is no market means NRV is almost nil. You have to scrap it. You have to give it to the scrap trader just on kg basis. So if the machine is kg, 100 kg, 5 rupees per kg, you have to scrap it. So NRV is almost negligible because there is no market for such kind of machines. Okay. Now the question is, and are always manufactured as per the specification of the customer. So what is the answer of this question? Finished goods cost or NRV, whichever is lower. WIP cost or NRV, whichever is lower. And debtor will be at realizable amount. So you have to make a provision for bad debts. As far as 6,50,000 is concerned, you have to see how much amount you can recover from this customer and make provision for the balance. So if you think 10 lakh out of 6,50,000, 1 lakh can be only recovered. So make a provision for bad and doubtful debt of remaining amount. But as far as finished goods and work in progress are concerned, there is no market for such item. They cannot be sold. They have to be only scrapped. So there the answer would be cost or NRV, whichever is lower, and most likely the NRV will be the lower figure. But we don't know what will be NRV. So therefore you can say nil value, close to nil value. We really don't know exactly how much amount you will realize. It will be close to nil value. For FG and WIP, the valuation will be approximately nil. But for debtor, we will see how much amount can be realized, and based on that, we'll make a provision for doubtful debt. So now this chapter AS2 is over.